Let's get back to the markets and this tech-driven sell-off. Let's bring in Charles Schwab, senior investment strategist Kevin Gordon, and Vital Knowledge founder Adam Crisafulli. Great to have you both here. Kevin, I'm going to kick this off with you. We just mentioned the Nasdaq falling 2% today. Tech really led, including mega cap tech names leading to the downside here. We have the Nasdaq falling back below correction territory level of more than 10% off of the record high. You got an S&P crossing back below its 200-day moving average here. How much the technicals matter? Are you surprised, given the tariff dynamics, the hawkish Fed speak we got today, and some of the other dynamics here in this market, to see us taking a breather again?
Well, not surprised to see tariff dynamics driving this. And I think if you add on to the fact, you talk about a lot of this weakness in tech, there are these two really interesting dynamics, and it's almost a double whammy at play for the stock market right now in terms of what's contributing to the weakness. You do have the kind of reversal in the big momentum trade that has been the case within tech and tech adjacent. That is mathematically going to hit the index, in a harsher way, especially something like the Nasdaq. But you've also got all of the tariff concerns, the back and forth, on again, off again, this really uncertain environment, which is starting to hit other areas. Even today, as the sell-off worsened, it started to move into financials, it started to move into industrials. But if you look at the correction that the S&P had, the industries that are hit hard by tariffs, like retail, for example, or like autos, they were sort of at the bottom of the leaderboard. So it isn't the case that it was just tech or it was just the mega caps that were leading to the downside. Mathematically, sure, they contributed a lot because of their weight in the indexes, but you definitely saw the tariff concerns hide out in there as well. It just was masked a little bit by what was going on with the mega caps.
Adam, I want to get your thoughts on this market here. I mean, is this a buying opportunity, or is this a time to sit on your hands and just be cautious given all the uncertainty?
Yeah, I think it's more the latter than the former. The underlying price action today wasn't horrible. The equal weight S&P really was barely down. It finished off about 20 basis points. So it was primarily confined in tech, which is almost independent of tariffs, what's happening and driving tech lower. And this has been a year-to-date theme now, where the Nasdaq's been a huge underperformer. The equal weight S&P's held in better. I think right now, we rallied about 5%, dropped to peak in the last couple of weeks, week and a half. And it's probably better not just sit on your hands. We wait to see. Next week's going to be huge. We get a lot of important March economic data. We get the big tariff announcement on the 2nd, and that will provide some clarity as to what's happening in the underlying economy and then in the coming months. But I think for right now, we had a rebound rally. I don't necessarily think we set fresh lows immediately, but it's best to kind of just sit on our hands and wait for more data to make a decision.
Kevin, what about the consumer? The New York Fed today fleshing out how student loan delinquencies and defaults are going to tank the credit scores of around 9 million borrowers, a couple million into subprime just in the first half of this year. Is that pressure on the consumer on top of what you're just talking about with tariffs priced into the market at this point?
I don't think fully, and I think part of the reason for that is because we're still seeing, a relatively large gap between all of the soft data and the hard data. And I think one of the reasons that, the market has been relatively, resilient, even though, yes, we did have a full-blown 10% correction in the S&P, but certain parts of the market that you would expect to get hit much harder, like the deeper cyclicals, have been relatively resilient in that process because there's probably still, a focus on what has been relatively resilient hard data coming into this year, but also a hesitancy and uncertainty to not know whether the soft data is telling us and giving us a reliable signal. And I mention that because consumer confidence data that came out yesterday was weak virtually across the board. There were some labor components that were a little bit better, but when you look at the broad array of data that we've gotten, whether it's from the University of Michigan, whether it's from the New York Fed, some of the sentiment surveys that have come out from the Conference Board beyond the consumer, there is more weakness there. So I think directionally it probably matters more. It's harder to put more weight on the magnitude of it, but if that's the direction we're going, where confidence and sentiment are softening, then I think you have a little bit more of an issue, especially to the point you just made from the New York Fed and that data that's coming out.
Adam, is this a market where investors have wanted to be, on balance, too optimistic? And I ask that just thinking back to what's happened since November, when, for whatever reason, investors didn't want to price in the possibility that President Trump was actually going to do what he said he was going to do.
Yeah, I definitely think that, there still is some skepticism that tariffs are a negotiating tool, much less than before. I think markets appreciate that Trump 2.0 is going to be a lot different than Trump 1.0 when it comes to tariffs. There is a genuine embrace of a tariff-first economic policy, and these are going to be put into effect So I think the market, has certainly shifted its view on that. And tech is an area where there's still kind of a lot of stubborn optimism around that group, given the multi years that we've seen of robust outperformance. We continue to see people be surprised by just how the degree of the underperformance in tech so far year to date. So tech is where there's still kind of a lot of optimism that's being squeezed out. A day like today, in particular, after a few days of a rebound, it's kind of definitely causing people to, I think, turn a little bit more cautious on the group.